Hey, Bulls and Bears, how's everybody doing? It is Thursday, March 2nd, 2023, back with another dose of economic reality. As usual, we are documenting the slow motion economic collapse of the United States and most of the world. And I wanted to bring you this report today, this update, and it's not fun subject matter, trying to be accurate though on what's happening here with the financial situation for most people, what's happened with the quote unquote economy, an economy in which the strength of the economy is based on how many purchases people can make and how much debt people can rack up. But here is the slowdown: consumer spending slowing down. We have a consumer spending based economy, and that's not a good combination when people are loaded up with tons of debt. Spending is slowing down. We're going to start seeing corporate profits now dwindling, declining. We've already seen it, but now we're really going to see the rubber meet the road here. 2023. We have a hunger cliff. A hunger cliff. I know that sounds dire, but get ready, because according to some news sources that I have today to look at, we are headed into a food apocalypse. I don't know what to call it here, but you let me know. But from what I could see, we're headed into third world country territory here in the United States of America. And I think if you just look around, a lot of the bigger cities already look like third world countries. But now take a look at what's going to be coming down the road here. Oh, JJ, this is doom and gloom. You're exaggerating. Well, take a look at this headline and see if I'm exaggerating. Okay, and as you can see, this is not a crazy website that nobody's ever heard of. This is CNBC. Hunger cliff looms. Hunger cliff looms, warns expert. Average recipient to get $90 less in food assistance program. And folks, what happens when people are more desperate? They don't have enough money to buy food. We've documented it here hundreds and hundreds of times. Crime rises. And we're this year, according to what I can tell, we're going to see a huge spike in crime and people taking stuff that's not theirs, for lack of a better term. In March, that's this month, 32 states, including DC, will end emergency supplemental nutrition assistance programs. This is another program that was carried over or extended beyond the health crisis days, and just now going to end that supplemental assistance, right? So this is not going to be good. And it's being described here, quote, it's a huge hunger cliff families are facing. All right, the article continues. According to the Urban Institute, this policy, this food program, helped keep 4.2 million people above the poverty line, right? So something as small as some help with the monthly food budget helped keep 4.2 million people out of poverty. Even with that, we still had a lot of poverty. They're saying it helped reduce poverty by 10% and child poverty by 14%. Right? What do we think about this, people? What would you call this? They're calling it a hunger cliff. Maybe I'm wrong. Maybe the fact that there's a hunger cliff coming, maybe that's a sign of economic strength. All right. So we see all this other news that's put out there that's spun into good news. So I guess another 4 million starving people, that's a sign of economic strength. And we're going to continue to see the cost of food go up and up and up. So it's not going to get easier. Again, maybe I'm wrong, though. Let me know down in the comments. One, maybe it's economic strength. Two, maybe there's going to be a magic farm guy that comes down. So instead of Santa Claus, we've got, maybe Fairy Farmer will come down and start up all kinds of new farms, and everything will be fine because we're going to have a bunch of new food coming. All right, but not to be negative here, maybe a bit of good news or positive news. California, the biggest exporter of food throughout the United States. California, we are the number one farming state. I think I mentioned that before, but many people still don't realize that. We're getting a lot of rain now. So this multi-decade drought that we've been in, what some people have called the 1,000-year drought, may be coming to an end. With the amount of rain that we've gotten. In fact, the amount of rain that we got just last month in February was more than the amount of rain that we got in all of the year 2022. So there you go. There's a little bit of good news. And as we reported here, a lot of the farms were struggling because of the lack of water. The question is, will farms be able to put this water away for future use? But then we've got other problems too that are popping up all the time. We've got massive contamination now of many of our lands here in the United States. So I definitely still see challenging times ahead and surging poverty, and a lot more people going into hunger and being evicted from their home, depending on how this housing plan goes that they're going to pass down to try to protect renters. I think it's still going to get really, really bad here in 2023. Next, let's talk about Credit Suisse. Credit Suisse is on the verge or on the brink, or at least they were on the brink of a bank run. Credit Suisse sees historic levels of clients pulling out their money. And for those of you not looking at this, if you're just listening, I've got a chart up right now. If you look to the far right of the chart, you see a massive outflow that we haven't seen in well over 10 years. And as a result, the stock, the Credit Suisse stock, has crashed to another or near another all-time low. I think it bounced up a little bit. It hit rock bottom, it bounced up, but we're definitely seeing signs of stress and distress within the banking system, and Credit Suisse is a good example. And it's being reported out of Bloomberg that Credit Suisse had to increase their deposit rate to about 6.5%, which is a pretty good return if you look at CDs and other forms of return for deposits. And this is actually pretty good. Hopefully, they're going to be able to stave off this bank run by offering a higher rate of return for depositors. If it's not enough, if depositors continue to pull their money out of the bank and panic, you could see some major systemic fallout happening within the banking system, because Credit Suisse, could be so big that you see contagion unfold within the entire worldwide banking system, because there's so many derivatives out there. And when one major bank fails, you could see a domino effect. And, that could be another area of the monetary system that we need to keep an eye on. I mean, we've been keeping an eye on it, but we've never seen this type of outflows from such a large worldwide bank as Credit Suisse. Now, as we can see right here, Credit Suisse caters to large investors, large portfolios, hedge funds, etc. And this 6.5% return is pretty good. We see JP Morgan with a 5.25% return with a minimum of 15 million. Credit Suisse only needs a minimum of 5 million. Citi with a 5.2% return on a 3-month, and that's with a 10 million minimum. UBS about 5% with a 5 million minimum. So, folks, the big picture or the bottom line in this looks to me like big money depositors are starting to become very, very concerned about the solvency of the financial system, especially Credit Suisse. And some of you may be saying, well, we've heard this for years, that there's going to be financial system failure, or Credit Suisse is going to go down, or maybe it would be Deutsche Bank. But did you see the chart? We haven't seen these types of outflows in over 10 years. I say over 10 years because that's as far back as the chart goes. It may be 20 or 30 years since we've seen these types of outflows. But bottom line is, it looks like big money depositors, investors are becoming very, very sketchy, for lack of a better term, sketchy about this financial system. We know these banks are leveraged many, many, many times over. We know they're loaning out a lot of money that they don't have. In fact, there's a zero reserve requirement. Banks were able to get away with having very little money in deposits. Interest rates were so low, so most people didn't want to park their money in the bank anyways. And to me, it looks like a huge stick of dynamite that's ready to blow up the entire monetary system. All right, let me know what you think about that in comments, please. I'll be glad to hear. I'll be really happy to hear your thoughts on it. But that's my best take on the situation. Next, we have Blackstone. Yes, Blackstone defaulting on a loan or on a bond payment. So this is something that many people would never have expected to see. Would you ever expect Blackstone to be defaulting on their bond payments? And what is a CMBS? That is a commercial mortgage-backed security. And we know that we've seen a lot of vacancies, especially since the health crisis, a lot of commercial property vacancies, right? And that's this type of investment here. So there's a lot of distress happening. They're reporting about a 45% vacancy rate from this portfolio of properties. That's almost half, folks, 45%, right? So things are happening. Things are starting to be revealed. I know it's happening very slowly. There's been people predicting a collapse and systemic failure of the financial system for many, many, many years. But because of the nature of the fiat, funny money, monetary system, the fractional reserve banking, because of the nature of the system, they can keep extending it, keep extending it, keep extending it, keep kicking the can down the road. But now we're starting to see talks of bank runs, failure of major institutions like Blackstone to pay their bond payment. We're seeing a hunger cliff coming up here for people. So things are converging and looking to be deteriorating on multiple different fronts. So I think 2023 is going to be an interesting year to say the least, right? So I hope everyone is doing good here. Not trying to bring anybody bad news, but bottom line is just be cautious, be careful, keep your head on a swivel. Crime is likely to get a lot worse. If this food cliff happens, you're going to see a lot more desperate people out there. Not something that I like to see happen, but at least we could try to know what's going on, be aware of it. That way we can prepare ourselves accordingly. Hopefully you have a nice garage to park your vehicle in. Anyone parking their vehicle on the street is at much higher risk now of getting their vehicle broke into. Remember just a few weeks ago, we talked about the report out of Los Angeles where the sheriff up there, the police were warning people, basically do not keep anything in your car. And it used to be, okay, don't keep an iPad in your car where people can see it, or keep your purse or gifts or packages. Now, don't even keep a bottle in your car because somebody might break in to get the deposit on the bottle or on the can, right? So if that's not a sign of desperate times and warnings of crime, I don't know what is. And that's not me saying that. That's the sheriff saying that, the Los Angeles sheriff. So big cities worse probably than being out in the country. So hopefully you're in a safe spot either way. Hope you're safe, warm, and doing okay for now. So let me know what you think about this down below. Credit Suisse, Blackstone, bond payment, hunger cliff. Wow, a lot of stuff happening, folks. We'll be back tomorrow with another update. Please make sure you like and subscribe so we can go through this together. And we'll see you all very, very soon. Keep stacking. Bye for now. Peace. Big love. Big love.